Hey everyone, Mark Newstater with eXp Realty. It is Thursday, March 4th, first Thursday in March, and another weekly real estate update here with Jaden Bax from Avenue Financial. Jaden, how are you?
I'm loving life. Thanks very much. How about yourself?
Well, fantastic. I mean, it sounds like your phone is going crazy, so that's good.
Yeah, sorry. It's been that kind of early spring for us, eh?
Yeah, exactly, exactly. And just when you think you have a day to slow down a little bit, it speeds up again. And of course, the weather helps, and people are in a good mood, and vaccines and all that good news. So
Mhm.
let's get right to it. We got a lot to talk about today, and we are going to start with our we'll start with our February stats. Let me take that one off, and let's get the right one up here. It was another huge month, and there's no doubt that the market is still on fire. The question, as we've been saying, is how long will it last? So when I pull this up, and especially when we look at our weekly stats, we're going to be able to see kind of what's happening in the market. So here is February, and February was hot, 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 although we were cold, cold, cold. Again, we had our highest overall sales since 2014 amongst all segments. So detached, apartment, duplex, semi-detached, and row townhouse. And those sales numbers were up 54% from a year ago. 54%. Active listings down 20%. And again, we've been talking about this really ad infinitum, really the last few months. But our pending sales, again, like January, were up big time, 332%. And then on the detached side of things, which is what we typically focus on, those sales were up 65%. So of course they outpaced the other segments. Active listings were down 30%, also outpacing the other segments. And our detached benchmark price, this is the big number everyone wants to know, is if I sell my house today versus a year ago, it's generally up 5% on the detached side of things. And we've been talking about this for months and months again. It's very community specific. So as an example, the southeast zone of Calgary posted a 9% increase in the benchmark price. Yeah. Say it backwards. Wow. Yeah. Like craziness, right? Like almost 10% up. So, I mean, take a $500,000 house in Mahogany last year, that could conceivably fetch almost upwards of 550 a year later, which I think if you ask people last year, if they said, we're going to go through this pandemic, a lot of people are going to lose jobs. And of course, our hearts go out to all those people. But you're going to be able to sell your house for 10% more. It just doesn't make sense, right? But it is what it is. So, and check out those average days on market too. And this is what we've been talking about: is homes selling in a day again. I'm going to give you an example here shortly of something that just happened to me a few short hours ago, exactly on that regard. So 37 days on market, and keep in mind that's the average. There's going to be homes that are selling in a day, and there's homes that are selling in 100 days, but there was enough selling in a day to bring that number down to 37 from 53 in a year ago in February 2020. So now, when we look at our weekly stats, and this is why I'm going to start really harping on this, and I have been. If you're thinking about selling, you need to start thinking about it now, and I'm going to show you why. All right, so let's get the screen share going, and let's look at our March 4th stats. So here is what is happening, because we do this every week, right? So then we get a rolling 4-week average of what's going on in the marketplace. So February 25th to March 4th, look at the new listings compared to a week prior.
Wow.
So we were up, that's up a lot. Now, fortunately, if you're a seller, we also had 599 between solds and pendings in that week as well. So we eclipsed our new listings coming on the market, but look at the amount of new listings that did come on. So our expireds jumped up. Again, they're going to kind of jump all over the place depending on when they were listed. Were they priced right at the beginning? And that's what I actually wanted to drill down on a little bit on those expireds. When you list a home, your first 2 weeks, and if you've heard me say this, you've heard me say it 1,000 times, your first 2 weeks are your busiest, right? And especially right now, you got to get it priced right. And even if that means underpricing it by $5,000 or $10,000, you're going to get all these multiple offers anyway, going well above your asking price. But you don't want to miss out on that. So if you're going to list now, make sure you nail the listing price so you are able to get those multiple offers and get your home sold quickly. Look at our detached listings active in the market right now, 1733 compared to 4 weeks ago. That's almost 200. That's 180 odd higher than 4 weeks ago. So again, we're seeing a bit of a creep, right? Last week we talked about how long can this last? Well, we're seeing a creep. So if we continue to see that trend going up, the biggest concern I would say is that if we start to see new listings outpace sales and pendings on a kind of a 2 or 3 week basis, we know we're probably coming out of this bubble. So just keep that in mind as you're thinking about whether or not to put your home on the market in 2021. But of course, so here's the example today, Jaden, the client that you and I both work with, and he saw a listing that came on the market, beautiful, stunning home, fully renovated, and first day on the market. And the earliest he could get in was 6:30 tonight. Well, that was too late. So by the seller's realtor said, you need to come at 4:30 because we are reviewing all offers at 5:30. So I've been saying this again for a while, and I'm just going to repeat it. Know what you want, and then when you see it, go get it. Because if you don't, it'll be gone.
Yep.
Right now, right? As of today, this week, maybe for a couple, 3 weeks, maybe a month. Who knows how long it's going to last? But that is my, that is my story. That is the moral of the story for today. These people weren't worried about it because they have to sell a home as well. So not a big deal for them. And there will be other homes that come on the market. And this is normally what happens at this time of the year anyway. But anyway, very interesting stats again. February was huge, and we're continuing to see massive sales numbers on the detached side of things. But you're a little bit more challenged if you're, as an example, an apartment condo. But row townhouse and Airdrie, as an example, is still on fire. Things are going crazy up there as well. So of course, reach out. Let me know which community you live in, and I can provide you all your latest stats. So Jaden, with that, what do you got this week?
Yeah, no, and so I'm feeling the same thing, right? So generally speaking, when I have a client who is really property focused and there's a certain property that they really want to look at, I grab the MLS, I take the listed number, and I would consider that to be the high end of what a client is going to pay on that. And I just use that as a baseline for qualification. Can you afford that particular house? Last couple of weeks, I'm adding $10,000 to that number because the offers that my clients are making are either straight on or quite often, in anywhere between $3,000 and $10,000 over the ask price, right? So this is something that we hear about in crazy markets like Toronto and Vancouver. And we're currently experiencing a smaller kind of scale of that. The other thing that I'm seeing this week is that rates have gone up by about a quarter point on 5-year fixed. And that seem to put people into a bit of a panic to buy. My advice on that, of course, we want to get you pre-approved. And if you find the place, go ahead and buy it. But on a $400,000 home with 5% down, that quarter point makes a difference of about $40 a month.
Right.
So less than $500 over the course of a year, less than $2,500 over the course of 5 years. And so if you're, making a rush decision based on a quarter point raise in interest rates and are really worried about hitting that low point, it's not a contest to have the lowest interest rate of all your friends. It's about paying the least amount that you possibly can for that house over the 25 years. And we're going to help you with that, right? So, don't feel like those rate changes are a deadline for you. We're going to find the right product for you, and we're going to find a way to make up that difference over time anyway.
Yeah, I mean, interesting comment. I can't remember where I saw it, but somebody made a comment about are we experiencing a bit of what the U.S. went through in 2008, where people were overbuying, they were overcommitting to a home, and then when the rates jumped, significantly, let's say in 5 years from now when that 5-year fixed is done. But I mean, with it being so different here with the with your pre-qualification at what is the Bank of Canada rate at, and maybe explain to people again how that all works, because it isn't exactly, you're not going to qualify at 1.7 or 1.6.
No, exactly. And so I have certain ratios that your debts and your income have to fit within, and I base that on a 4.79% rate. So 3% higher than what you're paying right now. So basically, the government is saying that a house should take up a certain proportion of your monthly income,
right?
And so, but they're basing it on 3% higher. So we would have to get to nearly 5% interest rates for you to get to a point where you were kind of hitting that threshold that they're looking for. So I honestly think that's maybe a little bit aggressive by the government, but it's better aggressive than the other side. We have to worry about a bubble, right? And so, I still have clients that are getting into great homes under those restrictions. And so, there is that. I always like when clients give it a little bit more room anyway, and people tend to be a little bit conservative that way. They're not maxing out their budget. But either way, there's a little bit of protection built in. It's legislated in by the government.
Yeah, exactly. Another quick thing before we let everyone go for today. Interesting. A very good friend of mine moving up to Edmonton, and his fiance had what she thought was a pre-approval, which was really only a rate hold. So real quick, give people a 30-second description of what the difference is.
Pre-approval has been completely underwritten, and it still has 90 to 120 days until it lapses, but it's been completely underwritten and you're ready to get in and buy a house. And the only thing that we would have to review is the home itself. Whereas a rate hold, they've taken basic information, they've bumped up from what current rates are by 0.2 or 0.3%, and you can lock in at that rate by the time you're ready to buy. But you still have to go through the entire underwriting process.
Okay, good stuff. All right, so know the difference between a rate hold and an actual pre-approval, and of course, reach out to Jaden for clarification on that. Market continues to be hot, but don't rest on it. If you're interested in at least getting a home value, please reach out to me. I did that for a client yesterday, and he's in a pretty good position. You may be too, just depending on when you bought and different things you've done to your home and so many different factors. So please reach out. Jaden, you have a fantastic week. Enjoy the sunshine, and we will talk to you next week.
Yeah, you too, buddy.